Hello, hello. Good afternoon, good evening. Let me see. If you can hear me okay, if you see me all right, just let me know. We'll give it a couple of minutes before we get started. Today, we are going through the live trading session or live analysis session, looking at the markets. Markets have been moving quite significantly today, so possibly a good session with a couple of news to be released later. All right, as we wait for everyone else to stream in, give it 2 minutes before we get started. Hi, News, how are you doing? Just trying to make sure that you can see me and you can hear me all right. Just let me know, put it into the chat. Right before we get started. Webinar series with IronFX today. Good afternoon. How are you doing? Good, good. So nice to see a couple of you joining us again now at this point in time. 1 more minute and we shall get started. Let me know. So at any point in time, if you have any questions, please feel free to let me know. You know, any trading related questions, if you want some clarifications on analysis, any ideas, just share it with me in the chat. Just put it into the chat and I'll be happy to address those questions, give you my points, my ideas on that as well. Okay, so let's get started. Welcome again, everyone. Good to see you all here. We're here with IronFX on a webinar series getting through the live trading analysis today, right? And as usual, before we get started with any webinar or any series online or webinar online, a quick disclaimer, right? Information shared in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only, right? This material is the personal opinion of the author, myself, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of this material is strictly prohibited. Basically, what it means is that I will be sharing with you my thoughts, my ideas, my possible trade setups in this market for today. If you are going to be jumping into any trades, please make sure you check your analysis, check your own risk levels, your leverage levels, and make sure you don't over trade, right? So what I've seen is that from my years of coaching retail traders like yourselves, a lot of times it's not so much the bad strategy that catches a retail trader. It's more over leveraging or over trading that actually causes the big losses. All right, so make sure you have a take profit on every trade. Make sure especially you have a stop loss on every trade. That's the couple of things that's going to protect you at the best levels. With that, let's get started. All right, I'll get rid of that. And here we go, looking at the charts first, right? Again, my name is Jin. If you have any questions, please let me know. What I usually do, or what I do when I enter, before I get into trades, or when I start looking into entering trades, is I always check the news first, right? So my approach is I'll look at the fundamentals, I'll look at the news, and from there, I start thinking about based on the news, based on the fundamentals, where should prices be heading, right? Where should prices be heading? And then I'll look into the charts to tell me that, let's say, for example, if I anticipate that the euro dollar in this case should be heading towards the downside, but looking at the charts, if it's going towards moving up, I would wait. I wouldn't enter a trade. I'll wait till it hits a level, turns down, then I get into a selling opportunity. Or I look to sell the euro dollar down. So that's how I approach the markets. I look at first the fundamentals, check what's the overall direction it should be heading towards, and make sure it's a trend following scenario, right? So my usual trades are trend following. I wouldn't look into a counter trend yet, right? So I always go a trend following, and then I'll look at support and resistance levels just so that I know where my stop loss is likely to be, where my take profit level is likely to be. Then I'll look into, if it all makes sense, I'll jump into the trade, and then we'll let the price move and see how it goes from there. Okay, so that's my approach in terms of how I look to enter different trades at that point. So now looking at the news here, first off, looking at the news, we have a lot of news over this day, right? Early this morning, we had the US FOMC, the Federal Reserve Fed funds rate. What they did in the US was they actually brought rates up 75 basis points from a 2.5% to a 3.25%. So a rate hike from the US, right, pushing rates higher, 3.25%. Main thing here is not just the rate increase, but also when we look into the statement or the key highlights of the statement, 75 basis point increase, it also says that they're going to adjust policy as appropriate. Where was the other line I was looking for? Let me just find it there for you guys. There we go. Here it is. Okay, that the Fed, well, during the press conference, Chair Powell reiterated, reinforced the idea that they were strongly committed to bringing inflation down. Okay, so the Fed Reserve strongly committed to bringing inflation down, and they have said that they anticipate ongoing increases will be appropriate. Right, so it's not, well, one is that the 75 basis point increase was hawkish, right? It's a bit priced in. It was hawkish, but it's a little bit priced in. But it's more the comments from Chair Powell saying that ongoing increases will be appropriate. Okay, we're looking at further rate increases to come from the US, and then they're likely to continue increasing rates until they see inflation drop towards that 2% target level. So we're looking at more rate increases to come from the US, and that's why we actually saw that strong reaction to the dollar, pushing it up strongly. All right, so I'll show you here on the charts, looking at the dollar index here. The news this morning was at 2 a.m. GMT plus 8. So that's right there. Okay, so as you can see here, I'll move this just one before. When the news was released, we actually saw the dollar weaken, right? We saw it open at that 111 level, and it closed the hour at that 110.63, despite it shooting up and closing lower. Why so? It's because, as I said, that 75 basis point hike was priced in, right? Market anticipated that significantly already. So we saw that drop. And then during the press conference, and then as Chair Powell mentions, further rate increases, as he was talking about, keeping rates high, possibly high, commitment towards fighting inflation. We saw the dollar index gain that strength from that 111 or 110.60 level all the way. It ended the session at almost 111.40. Early today, it went all the way up to 111.80, and then we saw that big correction towards the downside. All right, I'll tell you why I believe, happened or what happened during this correction. Okay, but this was the news that pushed the FOMC news, the Fed Reserve rate hike of 75 basis points, and the press conference that pushed the dollar index from 110.60 to 111.80. Big move towards the upside. So that was the news we had with the US FOMC or Fed Reserves. Moving on through the day, early this morning at 10 a.m. GMT plus 8, we had the Bank of Japan. All right, the Bank of Japan with the policy rate, keeping rates at minus 0.1%. And also during the policy statement that accompanies it, no big surprises from the Bank of Japan, right? No big surprises. They held everything the same. They didn't make any changes. During the press conference at 2:30, they didn't say anything as well. And what happened on the US yen? Where was it? Where's my US yen? There we go. What happened on the US yen was at 10 a.m. we actually saw a lot of volatility, right? A lot of volatility shot up, shot down, and then continued towards the upside. It broke above that key level of 145, went all the way towards 145.90, and then came crashing down all the way to 140.65. Right, came crashing all the way down. So question is, why did the yen crash, right? That after the news at 10 a.m., we saw the yen push towards the upside because there was no surprises from the Bank of Japan, and also the dollar index was strong. That's why we saw that push up. But this just happened. This is about 2 hours ago. 2 hours ago. What happened here, coming back to the news, was that you can see almost 2 hours ago here, 1 hour 49, Japan top currency diplomat, Kanda, said that Japan has taken decisive action in the Forex market. They have actually started to intervene. Oops, take it that way. Intervene in the FX market. All right, so that's why we saw the Japanese yen go from 145.90 straight line within the hour all the way down towards 140.65, about 65 there. It was because of the intervention from the Bank of Japan. The yen was weakening too much, right? You can see that the yen was weakening too much. It broke above that key resistance level, and then we saw the intervention to bring it back down. At this point right now, with yen at 143, it looks like we might see further downside, especially with that diagonal trend line providing some level of resistance, right? So if it stays below that trend line, I anticipate that we might see further downside there for the US yen, especially with the intervention in place. If it does come back up, I don't think that we could see the US yen break above 145 again, or rather it's unlikely. If we do see this push back up, it's unlikely we'll see it break 145. It might come to 145 and turn down, but in my view, I'm looking for this to test that level, and possibly turn back down again, all because of the intervention from the Bank of Japan. Only push will be because of the dollar index. But how, this is not firmed up yet. My opinion, my view on how the Bank of Japan actually intervened onto, managing the US yen or managing the yen weakness possibly wasn't because of, they did not actually go strengthen the yen, right? My view is that the Bank of Japan probably did not strengthen the yen. What they actually did was sell the dollar, the US dollar, right? Another way of intervention, not so much managing the yen, but selling the dollar. Which is why it's not just the yen that dropped, but we actually saw the dollar index dropping from that 111.80 AT level all the way down towards 1010.46 and now tracking at that level. Okay, so I think that it looks like it's being pushed or rather it's being intervened through the dollar rather than just on the yen. So it's quite interesting times here with the markets, the way it's moving. A lot of news today, pushing prices in all directions, high volatility. Another reason why you always should trade with a good appropriate stop loss level. Make sure you have that. And then also just, you get trades right, you get trades wrong. Just make sure that you don't wipe out an account because of one trade. Following on from the Bank of Japan press conference, what we actually had today as well was the Swiss National Bank with their policy rate. What they did was they took rates from a minus 0.25% to a 0.5%, a 75 basis point increase here from the Swiss National Bank, right? But what we actually saw in this case with a rate increase, oops, let me just clear that out. Oops, take that away. Okay, what we actually saw with that was usually or typically what we would anticipate is when a rate increase, especially in the Swiss franc, in this case, we should see the Swiss franc strengthen, right? It should strengthen together with a rate increase. But what actually happened here was it weakened. At that hour, as the news was released, or before the news released, it pushed a little bit to the downside. Once it was released, it went up. It went straight up from that 0.9635 level all the way almost or breaching that 0.98 round number resistance level. Okay, so that was a bit of a surprise there. So I'll zoom that out. A little bit of a surprise there in terms of a rate increase, but yet we saw the Swiss franc weaken, right? A little bit of a surprise there. And you can see that in the scheme of things, that big drop, and then now it's set right across and push towards the upside. What I would do is at this point, I'll wait it out. I wouldn't get into a trade yet because, I'm looking at the Swiss franc and it should be turning down, but yet on the charts, it's pointing towards upside. So what I'll be looking for is, in this case, I have my lines there, right? I already pre-drawn it. I'll be looking for it to push up towards that 0.9868 level, the resistance level that we had since, since the 7th of September. I'll look for it to push up towards that resistance level, hit, then I'll look for that rejection. All right, I'll look for that rejection and push towards the downside. See, then it will fit my analysis that Swiss franc increases interest rates. It should turn down. It's hit a resistance level. It's turning down. I'll be looking to sell down from that 0.9868 level. And as an example, there'll be a trade I'll be looking at. It would probably be just below. I'll look for that rejection, about a 30-40 pip stop loss there, and then back down towards this point at about 200 pips. You don't have to go for a full level. It's a 1:5 risk reward ratio towards the downside there on the US Swiss franc. If it goes up, hits that resistance level and turns down. All right. So a lot of news we've had today. We've had the US FOMC. We've had the Bank of Japan with their interest rate, or rather no change, but the intervention from the Bank of Japan, and the Swiss franc giving a little bit of a surprise, pushing towards the upside instead of turning down as we had expected. All scenarios there being in play right now. The lucky last one we have coming up just after this webinar, right? Just as we end this webinar, we're going to have the pound, the Bank of Japan with the interest rate decision. They're looking to increase rates from a 1.75% not to 2%, but to 2.25. So they're looking at a 50 basis point increase to come from the Bank of England. Actually, I was thinking that could the Bank of England surprise markets with a 75 basis point increase, right? Could they surprise markets with a 75 basis point increase instead of a 50? With that said, looking at the pound dollar, see, that was my analysis there. I was looking for this to push up, right? So I'll take that away for now. With the pound dollar right now at that 1.13 level, right? Pound dollar at 1.13 level. If the Bank of England does come out with a 50 basis point increase, I actually anticipate that we might see this turn down, right? I'll zoom in a little bit for you. I think it might actually turn down because it could be a priced-in scenario. It could, again, similarly be a priced-in scenario where we see it turn down from this point towards that 1.12 support level, right? The 1.12 support level that we've just seen. If that's the case, what you could be looking for there will be a selling opportunity about 1.1280. Stop loss about a 50 pip stop loss. Take profit about 75 pips or even just there about 80 pips. You're looking at a 1:1.6 risk reward ratio towards the downside. If we see the pound dollar drop, despite a rate increase, could be a priced in scenario. However, if we do see a surprise from the Bank of England, if we do see a surprise from the Bank of England and they increase rates by 75 basis points, right? Or they come out and say, we've done 50 basis points, but we're similar to the US. We're looking at further rate increases, so it's going to continue on until we bring inflation down. Then we're going to see a very hawkish, or if the Bank of England comes out with very hawkish sentiment, we could see some upside on the pound dollar. From this point, I wouldn't enter yet. I'll wait for it to break above that 1.1350 level, right? And then stop loss would be below 1.13, so about 60, 70 pips stop loss. Take profit level, I would say first level will be just along that 38.2 Fibonacci and resistance level. Actually, let's do that. It could come down to this point. So that 50% Fibonacci level, because we have a new low there. So I've extended the Fibonacci down. So it could come towards that 50% Fib level. If it breaks above 50%, then we could even see it come up to test that 61.8. I think that looks like a very big move. I don't anticipate that we're going to see that big a move from the pound because of this rate, unless they really surprise markets with a very hawkish view. But I think realistically, we could be looking at 50. So you're still looking at almost 1:2 risk reward ratio towards the upside, towards that 1.1450 price level. All right. So that's the view on pound dollar on H1 time frame. We have, in this case, just a quick recap, both that upside and that downside potential, right? It depends on what happens now or what happens in a couple of minutes time with the news release. If we see a strong and hawkish Bank of England, we could see it push from this 1.13 towards 1.1450. If we see a dovish, right? Or no, actually not dovish. If we see a normal, a standard action and decision from the Bank of England and no surprises there, then we could see price react off this 1.13 level, continue with the downward trend, right? If I zoomed out a little bit, you can see continue with the downward trend towards that 1.12 level, right? You can also here have a bit of a channel towards the downside. Right, so you can actually look at that. So we're looking to see whether the price could break out of that channel to push higher, or if it's going to hit that channel, or it's going to stay within the channel and push towards the downside. First target at 1.12 could come all the way down towards the bottom of that channel of about 1.11. Right, I'll put a line there of about 1.11 there. All right, so that's the last news for today. That's the last news for today in terms of the big central bank news, all the fireworks. This is the last one. What happens to the pound dollar if it breaks above or continues within the current channel towards the downside? Both upside and downside potential to be trying or to be watching out for. With that, coming back to the news again, nothing much else. So that is the one, the last in 30 minutes, the one to pay attention to what could happen there. And then after that, we're possibly going to see the US markets come back in. We're going to see possibly some US dollar strength come back into play. But I feel that with the US dollar right now, again, at that 1.111 level, we might see it consolidate. I don't think it's going to break new highs today unless we get further surprises, but it's possibly going to stay within this range, within the range of 111.80 and that level of 110.65. Okay, so I think that we're going to see the dollar trade within this range, possibly come down, test, and bounce back up later into the US session. All right, so far so good. Any questions? Right, if you have no further questions, what I'll look into next is the euro dollar. Right, euro dollar finding again, I'll show you this on the H4 time frame. Right, euro dollar broke that 988, what was it, 0.9878 level. Right, overnight it broke that level, came down to test almost that round number of 0.98. Right, so it came within that area of 0.98 and bounced back up. It bounced back up, now back to that resistance level, support turn resistance level of 0.987 or 9880. Okay, so it's testing that level now. Looks like it's going to hold. That was on H4, coming back to the H1 time frame. Okay, coming back to the H1 time frame, in the smaller time frame, you can see price resisted, turned down. Now it looks like it's pushing back up again. Again, highly driven. The way the euro dollar is moving now is highly driven by the dollar index, the price volatility of the dollar index. So I say that, look for it to come back up, test that level, and possibly turn down. If we're going to see that dollar strength come back into play, we're going to see the euro dollar hit the resistance and turn down strongly. What you can also have here is a fib level. Let me just apply all the levels there. Okay, so you can have a fib level there. Oops, what happened there? Where are my lines? Where are my prices? I don't see my price levels. Hang on. Move that aside. No, not background. Prices. Okay, there we go. Okay, so we can see that movements. No. There we go. Okay, so you can see that reaction there. As it comes down, it tested. See that push and test of that 38.2 level, and then that rejection back down again. We're looking for that 38.2 or that 0.99 level to hold and to reject for that downside. Okay, so in this case, I don't think we're going to see significant upside on the euro dollar, especially with adding on to this analysis. In the shorter term, you can see a bit of a downward channel. Okay, and if we did this on the H4 time frame, you can also see it's a big move continuing down. We're looking at some retracement, but overall pushing towards the downside. What you could be looking for here is a rejection of 38.2 to push down, short either at this point, test and reject, to push down, stop loss tight at about 20 to 30 pips, take profit at about 50 to 60 pips, a 1:2, almost 1:2, even if you had a 30 pip there, and the 60 pips there, 1:2 risk reward ratio towards the downside. But what you're looking for is, in this case, a test, a reject, come back down, then you're looking to sell it down towards, back towards the recent low of 0.98. All right, makes sense so far? Fantastic, good stuff. With that said about the euro dollar, looking at the Aussie dollar, you can see that as I scroll through the different pairs and charts, the price action looks very similar because everything, there wasn't a lot of other news apart from what we just spoke about, the Swiss franc, the Bank of Japan, and now coming up, the Bank of England. So all the other pairs that didn't have big news, they're moving very similar in price action, being influenced by the dollar index, right? Very similar, being influenced by the dollar index. Generally, we're seeing here in the Aussie dollar, we're seeing that big downtrend. We're seeing the big downtrend, but not as, you can realize that it's not as significant as the euro, right? So I'll show you here on the Aussie dollar compared to the euro. Big, more significant push towards the downside. So in this case, I'll show it to you on the H4 time frame as well. You can see that push down. Let's see whether we can fit a trend line towards the downside. Okay, so I'm looking for that bounce. Not so concerned, or not wondering whether it will move too much towards the 0.68 level. I don't think it will get to 0.68. Seems like a very big move towards the upside. Something to watch is how it moves at that point. Right? What happens at that 23.6 level? We can see that it's tested. Now looks like it's rejecting. Can it reject that level and push back down towards the bottom of the channel? Right? If we do see that dollar weakness still maintain, then could we see this push up towards 38.2 or even at 50 level, that 50% fib level, before turning back down again? Okay, but needs to clear this one first. It needs to clear that 23.6 level first before we're going to see that downside. Okay, so that upside. So it needs to clear this level, possibly push up towards 50 and turn back down. I don't think you'll get to that 0.68 level or that top of that channel before turning down. If it does turn down either from that 23.6, let's say for example it goes to 50 and turns down, then I'll be looking for a, I'll put in that line there just for you guys, that 50% fib level. I'll be looking for a test, a reject, and then a sell down, about a 30 pip stop loss all the way down towards the bottom of that channel, about 150 towards the downside, a 1:5 risk reward ratio. That's if we do see the Aussie dollar climb strongly. I'm not so sure it'll climb that strongly. So let's say that if it does reject at this point, again, you could push this level down. You can look for rejection there. Tight stop loss. Again, 30 pips stop loss. About a 60 pip take profit. Almost a 1:2. Almost a 1:2 risk reward ratio towards the downside there on the Aussie dollar. All right. So two key levels identified there, two potential trade ideas. Again, with about that 30 all the way down towards that level. Right. So still looking for the downside on the Aussie dollar is whether it reacts off this level or climbs higher and turns down from the 50% fib level. Okay. Very similarly, that's the Kiwi dollar. Take all of that away. You can see that it's moved very similarly, right? But a little bit less, right? So if I go to H4 here, you can see that it's starting to reject that level. This is also starting to reject that level. So what you'll be looking for here in this case, again, downward move. Again, coming very close to that 23.6 level, looking to turn down. Right, looking to turn, it's touched and it's rejecting to push down. However, in this case, hang on. In this case, what you should notice is that if we did sell from here, your stop loss above that 23.6 level, right? Your take profit at about 46. It's not a very good risk reward ratio towards the downside there for the Kiwi dollar. All right. So I'll be more keen in terms of which ones to sell. I'll be more keen to sell the Aussie dollar down rather than the Kiwi dollar. So if I made a choice, it'll be definitely the Aussie rather than Kiwi. Now looking at the US CAD. Okay. US CAD very strongly towards the upside. Okay. You can see here that we have this channel towards upside. And it's reacted very strongly off the top, also because of that dollar weakness in the interim right now, pushing it back down. And I like this level here at 1.35, right? So it broke up, tested at 1.35 level, failed to break higher and turned back down. And at this point, I would say that that upside trend still continues, right? So even if we zoomed it out, you can see the upside trend still continues. If I did a projection, I would say that it could come towards that 1.37 level, right? So we could see further upside there on the US CAD, but it needs to break above 1.35 before we could see 1.37 as close to that top of that upward channel. Okay, any questions so far? If you're all happy, all good? Super, super, very nice. Thank you, guys. With that, let's look at gold. What's happening with gold with all that bounce around? All right, so I'll clear up the charts a little bit for you guys. With all that volatility in the dollar index, with all the price movements in the US yen, Swiss franc going in all different directions, what's happening in gold? Surprisingly, it hasn't done too much, right? Surprisingly, gold hasn't done too much. It's shot up, tested the 1680 level, came back down, tested 1653, stayed within those range, hasn't done too much. Okay. Thanks, Ibu. Thank you very much. And for Bill, I have done euro dollar, but I could do a quick recap on that for you. All right, I'll just do a quick recap on that. So gold again looks like, I was anticipating gold to break above that 1680 level, push up possibly towards that first 1700 level and maybe higher, because with the Russia-Ukraine conflict reigniting, with all the uncertainty and possible global recession worries, right? I was looking for gold to become a good hedge against risk and for it to push towards the upside. But it hasn't done that. See, if I zoomed out, you can see that gold is at a very low point right now, but it stayed within this range. It stayed between 1653 and 1680. What I anticipate is that gold is likely to continue doing that, right? I think it's going to continue within this range. I would caution to expect it to drop further, because now we're looking at a weekly time frame. How low can it go? The next level down would be at about 1617, right? At about 1617. So quite a big drop. And I think that if there wasn't any major news or major disruptions, we shouldn't see a reason for gold to drop down towards 1617. I think it's going to stay within this range. If it fails to break towards the downside, it's possibly going to collect some strength and momentum to push back up towards the 1700 level. And if it gains enough momentum, we could see 1735. All righty. Okay, fantastic. All right, so for you, I will jump back to the euro dollar. Just quick analysis there again. Did I do that? No, wait, here's my euro dollar here. All right, so euro dollar right now, again, testing that level at, I'll take this away for now. All right, so it's currently at that 0.9880 level, right? Looks like it's pushing a bit to the upside. We're looking at it on the H1 time frame. It's retraced back up, testing that level. What I'm looking for here is if it can, because of that big downward move, I'm looking for it to push up, turn down, and I'll be looking to sell down back towards that 0.98 near-term support level there, right? That's why I have my entry here. Stop loss about 30 pips, take profit about 60 pips. You're looking at a 1:2 risk-reward ratio towards the downside. What I'll add on to that is that looking at the way price is moving, if this does gain more momentum or more strength to push towards the upside, I'll move this a little bit just so we see the price. If it does push towards the upside, look to see if it's going to break above that 38.2 fib level, which is also a nice round number of 0.99. If it does break above that point, then we could possibly see price come towards that 50% level. All right, we could see price come towards that 50% level. Again, what I'll be looking for is, I look for reaction levels. I look for reaction at that level. If it pushes up, and then you could be looking to sell down from that point again, just below that 0.9929. In this case, stop loss about 20 to 30 pips, take profit. First one at about 40, you're looking at a 1:2 risk-reward ratio. And then you could also go all the way down back towards that 0.98 level. And you got a good 1:5 risk-reward ratio towards the downside. So I'll be looking to see what happens there on the euro dollar. If it turns from this point, we got a quick selling opportunity. If it climbs, if it continues to climb up towards that 50% fib level, then we could look for selling opportunity at that point. What I would not do is I wouldn't be looking to buy it up, right? I wouldn't be looking to buy it up with the way prices are moving. Big, strong push towards the downside. You can see that although it can push up, the way price is climbing, it takes a long time for price to climb up, a quick push towards the downside. A long time for price to climb up, a quick push, and then that climb up with a big push. That was because of the news on Russia-Ukraine conflict, a push towards the downside, right? So it looks like it could climb, but it's going to be a labored climb, slow climb towards upside before a quick rejection down. So I'm still looking for that selling opportunities, that rejections towards the downside. All right, so I hope I gave you a good recap there on the euro dollar. And let's look at, you're most welcome. All right, so we did gold as well. Let's look at oil. Oil, again, similar, very similar. Commodities seems to be taking a little bit of a day off because oil is currently trading between, or still trading between, that 90.50 level and that 93.50 level, right? So it's been fluctuating between this range. It's going to stay there. I was anticipating, again, a big upside on oil because of that conflict with Russia. Right, so a supply constraint to come, but that hasn't happened. We saw that push. Where was it? Yesterday. Where was it? Yesterday. That big push towards the upside. I thought that was going to continue up, but that move up was quickly reversed, and price stays within this range. So what I think we're going to see is similar to gold, price is going to continue within this range, bounce around with no clear directions yet because we haven't seen any clear big news being released on oil, on Brent. Okay. So nothing too exciting there, still within a price range level. With that said, any other questions? Do a quick check of what's happening with the markets. See, yen is still dropping, got resistance, still turning down. So I'm still looking for it to push lower. The dollar index, again, coming down. Looks like we need it to test that 110.65 level. Pound dollar pushing higher, right? So with the news coming out in a couple of minutes' time, what we're looking for is whether it could break above that point, look for that buying opportunity towards the upside, back towards that 1.1450 level. All right. And then US yen, we saw already. Where's my Swiss franc? Swiss franc, again, pushing higher. Looking for that test of that resistance and looking for that possible rejection towards the downside. And that's it. Aussie dollar not doing too much. Similar with the Kiwi dollar. I think the focus here will be back to the pound, the Swiss franc, the US yen especially, and the dollar, the way the dollar index is moving. The US CAD rejecting that area of 1.35, could be looking for it to come down to test 1.34 because that's the bottom of the channel, right? Looking for it to come down, test that level, and possibly bounce back up again. All right. With that said, what I would do is I'll call an end to the session here because in 10 minutes we do have the Bank of England news interest rate decision, right? So in 10 minutes we do have the Bank of England interest rate decision. Look out for it, 1.75, looking to go to 2.25. Could we see that push? And could we see the pound dollar push higher? All right. So with that, trade well, trade safe, and let me know how you go the next time we catch up. I'll see you. Take care now. Bye-bye.